In this video, I will show you how I fixed my portfolio to finally outperform the market. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year. But it was not always the case. When I started, I made all the possible mistakes. And then I learned from the best investors of the world, Charlie Munger, Warren Buffett, Peter Lynch, Howard Marks, and I learned from them their framework, their philosophy, their way of picking stocks, and I completely changed my strategy. It was in 2018, and in this video I will show you the changes I've made so that I can finally compound my wealth and outperform the market. I think we can start. The problem I had at the time was that my portfolio was messy, and it was a pain for me because I knew I wanted to start investing, but it was not a smooth ride. Let's call it this way. I had an approach without any discipline. I was chasing tips, chasing momentum, and quick profits led to chaotic, messy portfolio. I'm making this video because I think this video will help a lot of people in this exact situation. If you've been investing for, I don't know, a couple of months, a couple of years, maybe your portfolio is like this. And there is a way to change it, to finally have the performance you deserve. In the past, my portfolio was very messy. I had stocks without any research. Just because the stock was going down, I was buying it. Just because I watched a YouTube video or I read a Twitter post, and I was buying things without any conviction. And also, you had a hidden cost of diversification because I had too many stocks in my portfolio. Holding too many stocks, so more than 20 stocks, lowered my conviction and became impossible to track effectively. I had 20 positions in my portfolio, plenty of stocks in my watch list, and it was quite bad. It was quite bad because I did not have the conviction. It was only the starting point, and I wanted to own a little bit of everything. Now my portfolio is drastically different, and I will talk about the current situation later on this video. But in the past, I had a lot of stocks in my watch list without any conviction. And I see many people on the internet, retail investors, they have exactly the same problem. They have a portfolio with too much diversification. And this is a mistake because if you are too diversified, you dilute your results. And this is not good. The real underperformance. In 2018, I realized the S&P 500 was easily beating me despite all the time I spent researching too many stocks. My attention was diluted. The problem was the lack of focus. So, what was the pivot? Defining the quality focus. What was the solution? The core shift. In 2019, I moved from asking what's cheap, what is going down, to asking what's truly high quality and built to last. This is the Warren Buffett philosophy. If you buy stocks, you have to picture the investment for a few years. Not a few days, not a few weeks, not a few months, but real long-term investing. So you have three key pillars of quality. Three key pillars that have tremendously helped me improve the quality of my portfolio and improve the performance. My simple screening criteria for an investment compounder: you have high ROIC, return on invested capital, strong pricing power, and exceptional management. This is very, very important. If you have these three key pillars and you are very disciplined with this process, you will remove more than 90% of the stocks. Okay? And not everybody is doing this kind of work. To have the discipline to remove 90% of potential investments. You only want efficiency, pricing power, good margins, and good quality management that is shareholder friendly, with dividends, with buybacks, with smart capital allocation decisions. If you don't know what I'm talking about, maybe this is a good start. Maybe this video will motivate you to do the work, because it's by doing the work that you can outperform the market. This is the reason I've been generating 25% per year, despite a very bad year in 2018. By the way, if you want to become a better investor and improve your performance, I have a coaching program. It gives you the exact method I've used to generate 25% per year for almost a decade. More on that at the end of the video. Another point, the commitment to long-term investment. I've talked about the long-term investing, but I decided to treat my stocks like real businesses. Ownership, partial ownership of real businesses with a 5-year time horizon, a 10-year time horizon. Quick note, it doesn't mean that I have to buy things and hold for 5 years or 10 years, right? If I buy something in the hope of holding for 5 or 10 years, but the stock goes up and is being multiplied by 5, the stock is being expensive by a lot, I will sell it. It would be stupid to hold just because you made a promise to yourself to just hold for 10 years, right? If the valuation is getting too expensive, you have reasons to sell before. And this is something I see for Warren Buffett. When Warren Buffett from Berkshire Hathaway is buying a stock, they have this multi-year horizon in mind. But sometimes they sell stocks because they become expensive, right? So you need flexibility, but need discipline in your research process. This is a key difference here. Next point, the fixing framework. Here are some actionable steps if you are in this situation with a messy portfolio. Step number 1, this is painful. The portfolio cleans. The painful but necessary process of ruthlessly cutting every stock that failed the quality test. So, first step, it will be difficult. I'm not making this video to sugarcoat anybody. You look at your portfolio right now, if you are in this situation. You say, do you have a high ROIC, return on invested capital, for all my stocks? If this is above 15%, you keep it. If this is below 15%, you sell it, you remove it. Second question, do you have strong pricing power, like big margins, gross margins, or other qualitative aspects to prove pricing power? If you have pricing power, you keep it. If you don't have pricing power, you sell it. And 3, do you have an exceptional management team? Do you have, high insider ownership or a competent management team that knows what they are doing? Okay. If you don't have a good management team, you sell it. And you only keep strong businesses with strong management teams. By the way, this is not financial advice. You do whatever you want with your capital. This is your own portfolio. I'm just doing this for the sake of the video, right? I'm not telling you to sell or to buy anything. Not financial advice. I have to put this disclosure here. Okay, so you put these 3 filters and you ask 3 questions for all your holdings in your portfolio. Maybe you have 30 stocks in your portfolio. So not all of them will go through these filters. Maybe out of 30 stocks, only 18 will go through this filter. Maybe only 8. So act accordingly. Step number 2, concentrated conviction. Shifting to a small number of high conviction positions. Moving from 25 stocks, 30 stocks, to 10 stocks. Now in my portfolio, I have 12 stocks. And yeah, roughly 10 stocks, I think, is the sweet spot if I want to outperform the market. And I think having too many stocks, 30 stocks, or even more, 50 stocks, is too much. You don't have the time to monitor everything. So it's painful, but you have some filters that will help you, okay? And you cut down the positions to have a more concentrated portfolio because you will have more conviction. These are your favorite investments. You know exactly what is happening. You know the companies, you know the management teams, you know the valuation, you know all the risks, you know everything. You will increase your chances of outperforming the market if you only focus on your sweet spot. This is very simple. Step number 3, the pricing filter. I now use strict valuation models to ensure I only buy quality companies at a fair price. I want to avoid the emotional buy. To buy because the stock is going up, because I have FOMO, fear of missing out. You want some discipline in your valuation process. Next question, how do you value a company? Well, I've made some videos on YouTube about this. I help people value companies inside my coaching program. You have a couple of ways to value companies. You can use multiples. You can use a discounted cash flow model. It works. Use a model and use discipline and don't buy expensive stocks. Keep with cheap or fairly priced stocks, and you will be fine. 4. The results and the conclusion. The outperformance proof. Clear performance comparison. That was a messy portfolio in 2018 versus quality-focused portfolio returns. Here are my returns. By the way, my returns are public. If you go to my website, you will have my performance. I'm sharing my screen, I'm sharing everything to you, and my results are now audited. So these have been my results so far. In 2018, I had a loss of 30%, when the S&P 500 lost 4%. I decided to change, to focus on quality and avoid bad companies. And since then, the performance has recovered immensely. And between all these years, I had a CAGR, compound annual growth rate, of 25% per year, compared to 14% for the S&P 500 and 8% for the Dow Jones. And I can also show you the performance for 2025. As I'm recording this video, for 2025, the return year to date, 22%, when the S&P 500 has a performance of 16%. So that's an outperformance of what, 4 or 5%? I'm doing more than the market. So far, so good. We are in December, so I hope it will last until the end of the year. But yeah, the outperformance is still here because my portfolio is full of quality companies bought at a good price. Okay? And there is also a personal benefit if you only focus on quality companies that are outperforming the market. Because quality focus equals less time spent, less stress, and better sleep. You have true financial serenity when you know what you're doing, when you have conviction, when you are not stressed because of emotions, FOMO, because you buy expensive things. No. The process is pretty simple. The process is inspired by Warren Buffett, and the process works. So I have much less anxiety because of this strategy. Now, for those who want to go deeper, if you want me to help you do the same and have the same outperformance, you can work with me directly. I will teach you my exact strategy to outperform the market. If you like this content and you want to go deeper, I have a coaching program. In this program, you will learn the strategy I use to outperform the market. You will learn how to find winning opportunities. You will learn how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, inside the program, you will have access to an exclusive community of like-minded investors, and you will also have access to my personalized guidance to reach your investing goals. Click the first link in the description to get more information. You will get a short video that explains how everything works, completely for free. No need for your email address, just click the first link in the description and I'll see you on the other side.